you kind of talk about the hard money space? First off, what is hard money? Okay, why is it beneficial, and what do you do?
In 2015, I noticed that many of my competitors' projects, infill projects, whether they're 15-unit condo deals or 60-unit apartment buildings or a simple fix and flip at the corner, weren't getting financed. And I noticed that because they were calling my company, Walnut Street, and asking if I was interested in partnering or investing somehow in their projects. I looked at that, and what I discovered was after the Great Recession, and specifically the Dodd-Frank law, traditional banks really pulled back from the infill developer or fix and flip developer space.
Mm-hmm.
And so I thought, wow, that's an interesting opportunity. This is a space that I know really, really well. I mean, we know what 2x4s cost and how to put them together. Mm-hmm. We understand finance. We understand the risk of these infill development deals. Why not lend capital to my former competitors?
Does somebody have to be well-seasoned to do business with you, or what do you look at?
The things that we look at, what takes a phone call or an inquiry from a lead to a qualified lead, one of those many things is experience. But that's not to say that we haven't lent money to first-timers.
Mm-hmm.
And the first-time folks usually come from the construction industry. They might have worked previously for a national home builder like Pulte or NVR,
mm-hmm.
and they're breaking out on their own. So experience is something that we look at, but if you don't have any experience, it doesn't automatically knock you out.
What would you say, Bobby, is the number one thing that people encounter with a bank that brings them to you? Like, what's their showstopper at the bank, and they say, all right, I need to look at hard money?
There's two showstoppers. The first showstopper is banks just aren't playing in this space. And so a builder or a developer might bring a project to a bank, and they might know a banker or a loan officer at a bank. And what happens is, from a banker's standpoint, it's a riskier loan because the borrower doesn't have a big balance sheet. The showstopper for the borrower, the developer builder, is the banker hits them with, these are all the things that we need in order to review this and bring it to our loan committee.
Mm-hmm.
And it's a big, thick piece of paper with 80 boxes to check. If you can get through all that and you can get a bank loan, you should, because the bank loans are going to charge you somewhere between 1% and 6%.
Mm-hmm.
Private lenders charge twice that. You mentioned that hard money space might not have the best reputation in your area, or might not have the best reputation, and part of it is the title, hard money.
Mm-hmm.
That's not very inviting. I wish it were called private lending, and we're trying to position ourselves more as private lenders.
Yep.
But especially after the Great Recession and the Dodd-Frank statute, this is real space. This is completely legitimate space, and
mm-hmm.
it's a viable option for capital for those that can't get traditional bank lending.